The value of surrendered annuity policies increased 18% through the third quarter of 2023 compared with the same prior year period, according to a new AM Best report. However, premium growth held steady at 17% through the same period, with individual annuity premiums notching its 11th consecutive quarter of year-over-year growth. Here to discuss these developments and some other trend lines is the author of that report, Associate Director Jason Hopper. And Jason, can you discuss how the rising interest rates affected annuity products?
Sure, John, thanks. So the higher interest rate environment did make annuity products more attractive to consumers. They can now get higher rates than they can even a couple of years ago, let alone stretching back all the way to the financial crisis of 2007, 8, 9. Higher interest rates have provided annuity growth in terms of premium. But on the flip side of that, policyholder behavior may begin to and has started changing to some extent with an increase in surrenders. Policyholders that may be getting, say, 3.5% from contracts a couple years ago may now see that they could get somewhere between 4.5%, 5%, something higher than they were getting, which could cause policyholder behavior to surrender their current policy and look to get a new one with higher rates.
That being the case, how do insurers keep surrender rates under control considering this interest rate environment?
Yeah, so that's a good question. Surrender charges is one of the main areas of protection. Typically, say 7 to 10 years or so, depending on the contract length, a insurer would basically charge an extra fee, if a fee off the face amount, if a policyholder were to surrender their policy somewhere within that surrender charge period, as I said, somewhere depending on the product, 3, 5, 7, 10 years, whatever it may be. So the policyholder then comes to the question of, am I going to pay this extra fee to take out this money and invest it somewhere new? They're basically balancing the current rate versus what they're currently getting. So the surrender charge protection is one of the avenues that insurers can take to somewhat control policyholder behavior.
What type of business profile might be most affected as we move forward for annuity writers, Jason?
Sure. So I think the two main companies that would likely be impacted a little more than others would be companies that are in runoff, and then companies that focus on block acquisitions, right? Companies that focus on block acquisitions may not be, currently do not sell new annuity products, so they would have more difficulty retaining the customers that may opt to surrender their policies and leave to another company. But the one important thing to keep in mind throughout this whole thing is asset liability management, especially in the rising interest rate environment. That's something that companies are paying very close attention to.
Thanks, Jason.
Thanks, John.
That was Associate Director Jason Hopper. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.